Hi guys, welcome back. So our baby NIO is reporting earnings in the aftermarket. Revenue of 9.8 billion RMB, 102% increase year over year. Number of deliveries increased 100% to be 24,000. Increase of 9.2% compared to Q2, but the margin rate had decreased around 10% to be 18% compared to 20% the last quarter. So a slight decrease of margin rate. That is the profit margin for cars. But the overall profit margin was 20%, so actually slight increase from the 18% of Q2. But the operating loss had actually increased from both last year and the last quarter. And same thing with the net loss, has increased 42% compared to last quarter. Adjusted net loss non-GAAP is up 69% from the second quarter. So that's excluding the stock compensation fees and some of the stock buyback. So the big increase in the operating expense was mainly due to the increase of R&D. It had more than double from last year and increased from second quarter by 35%, which I think is actually a good thing to see that they have increased so much of the R&D expense, meaning that they're working hard on the new product, new technology, and it makes me more excited to see the new model releasing in the next NIO Day event. Next month should be the cheaper version of the 87 with the newest auto drive technology. And also something to notice is that right now the field is getting more and more competitive. A lot of the traditional car companies are getting into the field. And I think every brand is fighting for the top talent, the top engineers, the top designers. So that is no surprising that they need to increase so much expense to build and maintain a good team. Compared to last year, the field is getting harder. It's more difficult than last year. It makes sense the top talents are getting more and more expensive. And not just salary, but also stock compensation. So overall, I think this earning report is not bad, still maintaining the 100% increase like always. The decrease of margin rate was somehow expected by analysts because of the chip shortage. And also the supply chain problem happened in Q3 because multiple suppliers got affected by the Delta virus a few months ago. So that should increase those expense for production. So the decrease of profit margin was somehow priced in already, and there were the sudden drop of the October delivery. It's not included in this earning, but it will be for the Q4 earning. It was due to the upgrade of the plant of manufacturing. So the October sudden drop of the delivery was already priced in on this day, first day of November, when it opened at the lowest point of 38 and continued climbing up, turning up like 180 degrees. So that's why what's more important now is the Q4 guidance the company gives. Let's see. The company expects Q4 revenue to range from 9.3 billion to 10.1 billion yuan. So that means it's somewhere flat from Q3 and the increase of 41 to 52% year over year. So that would be the first quarter in a while that it's not a double from the previous year. I think most of the analysts expect to have NIO's growth to be at least 100% for quite some time because it is still at a very fast stage growing in the industry and for the company. So I think everyone would look very closely in the following period to see whether this Q4 performance would be a one-time thing or is it gonna mark the beginning of a slow growth. And for me, I would incline to think that it's a one-time thing because of the upgrade for production line, and we have new products coming soon into the delivery, because for now NIO only has SUV, and once we have the sedan joining the family, I think it should boost up the delivery, should boost up the growth rate. And even though we stay flat with this range of revenue to be 1.5 billion, making the trailing 12 months whole year's revenue trailing 12 months to be around 6 billion. So using the current market cap of 6.6 billion, making this PS ratio for NIO to be around 10 or 11. So 1 year ago, NIO's PS ratio was about 20, and now we're around 10, about half of that. So keeping the same valuation as before, we could have a double of the share price here to keep a same high valuation because it's still growing fast. But of course, it means NIO needs to continue growing in this rate. So where do I see the price from here on? Today we had a huge drop of 5.9%, near 6%, from the beginning of the day into the closing. This bar looks very bad. It's dropping with volume too. So today the huge sell-off from Tesla, dropping 12%, driving down all the index together. S&P were down, Nasdaq were down, AIK went down 2%. And out of all the sectors, the EV sector took the biggest hit. So both NIO and Xiaopeng came down with it. Now I think a lot of people wonder what would happen if Tesla crashes. How would NIO and Xiaopeng stock behave? And for this, we should first take a look at Tesla. A few months ago, I thought a lot of the FANG stock had grown, except Tesla. So Tesla might take the lead to drive down the whole index. And it did from August and September. It was kind of like the biggest driving force for the index to run up. And 2 weeks ago, I said Tesla is now over and gave a price target of 1,300. 2 days ago, I suggested to take profit because it's getting near the target already. The highest was 1,240. I used this for the example for the psychology of every cycle and said watch out for Tesla to be into the greed and euphoria stage. And this is where the correction might happen. In this run-up, I think the big institutions have spent a long time building up their position. For a few months, from the beginning of the year all the way to around July and August. So let's see their average cost in this range. So in this range, average cost is 655, which is almost exactly a double from the peak last week. So when it's a double, it's an important price point to watch out for because there's lots of room, lots of opportunity to take profit already. Especially the hedge fund, the smart money, they're very sensitive and act in silence. So we don't know when they're moving the money while the price is going up. But with that said, I don't think Tesla is gonna crash from here on. The news, it seems like it's driven by Elon Musk selling 10% of his share, but 10% is only 10% of his shares. And just this 2 days alone had dropped already 15%. So I don't think it's mainly because of that. I just think it has been a strong run-up, so it's expected to have a pullback or correction. It might move up and down, consolidate on a platform, similar to the period from the beginning of the year to July, August until it broke out. So it could again form a triangle consolidation, just like last year from September to November until it announced to be included in the S&P 500 and it broke out. So coming back to here, we probably could form a similar pattern for the consolidation, moving up and down in the range between support and resistance until it break out one day or or probably make a golden dip before breaking out. I think the previous high of 900 should be a good support, so it might consolidate in this range. We'll see. So if that's the case, if Tesla can rest for a while, consolidate and move on the side up and down, it would actually create good opportunities for the other smaller players in the EV sector, like NIO and Xiaopeng. Tesla started to break out on this day, September 24. And then more move in mid-October and speeded up the growth in the last 2 weeks. Let's see what happened to NIO. See, September in comparison, that was the day Tesla started to break out. NIO did not follow. It was only going on the sideway and make another dip following the HSI movement. And this is mid-October. Jump up a platform and consolidate mostly on the side within this platform. And then recently move up another stage. So there's no speeding up for the growth, but more like a climb up through the staircase onto different platforms. So I think within this period, when Tesla was started to grow already, a lot of people would get more and more frustrated with the Chinese EV and looking at Tesla growing strong, speeding up the growth every day. This is where a lot of people cannot take it and might switch to Tesla by cutting off their NIO and Xiaopeng. So I think this range should be a transition from the shares from retail investors to the institutions. To see the range of cost, the average price is 37.8. So very close to 38, which happens to be a very strong support for NIO. This blue line here. This is where it started to have a strong run up last year in November. And even with the very scary delisting news for Chinese stocks, it was holding through by 38. And last year when NIO did a share offering at 39, it then closed above the 39, indicating 38, 39 would be the institution's cost. Coming back to this year, in September, NIO did a big gap down because of the share offering. So the selling price for the shares were around 38 to 39 as well. This is why today and yesterday I said in the Discord that NIO's support is first 40 and then next is 38. And 38 would be the really strong support here. If it can drop to 38, we would be forming a head and shoulder bottom, and that usually indicates a bullish signal. As I believe this range from mid-August to the end of October would be the range for the institutions to build up their positions in NIO, so their average cost should be somewhere around 38. So I think there is a good chance we won't see NIO below 38 again, because this would be below their own cost. And usually they would not drive it down below their own cost unless the market is down. Overall, the sentiment is down again, very negative. So they would take the opportunity to drive down further and wash more, to shake out more weak hands. But otherwise, it usually stays above their own cost. Today, after the earning, the post-market, at some point, it did a very big dip after the earning, dropping another 5% down to 38.2 to be the lowest. So it was backtesting the 38 support and did a V-shaped recovery, and then did a strong bounce back up to be above 40. So let's see tomorrow for the open. If it can test 38 again, I think it's a good opportunity. But as I said, I think 40 is the first support. So today I bought a call option, and I plan to add more if it drops to 38 because I only grab a small call option. I have enough shares for NIO, and I don't mind swing trading some options here and there. As long as the size is under control, the risk is minimal. For this earning, I think it's up to expectation. What's more important now is the next earning and the NIO Day event. I think the smart money should be getting into NIO for the next NIO Day in December. So November would be the time to build up the expectation for NIO Day. So in the Q3 earning, there shouldn't be any much good news announcing, and I think the management would wait for the NIO Day to announce the good news together accumulated. Plus, when the uptrend changed at the beginning of the year for NIO, I did say that the EV sector need to cool off until the second half of the year or the end of 2021. And the next NIO Day, we're gonna see the next sedan, and the ET7 is going to be delivering soon. They are speeding up to build those battery swap stations. So the whole battery swap is getting into a more consumer habits and a shared ecosystem with different brands. Many good things are happening. The fundamental of the company, the timing of the sector, and the Chinese stocks, I don't see we need to worry about NIO for now. Now, I hope you found this information helpful. And if you have enjoyed this video, please give me a big like and write me a great comment. And I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.